What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol CCL for Carnival Corp. On the left-hand side, we do have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this is going to be a bit of an update. You can see some rough levels on our chart, basically indicating this double bottom with the higher low, correct? And we also have a neckline that was around here, this 1977, broke that, and now we're consolidating above into a pretty healthy-looking bull flag here from the daily perspective. So just to ensure that that is in healthy territory here, let's take out our Fibonacci's, come in from the low of the green candle up to the high of the flag essentially. And yeah, absolutely. You can see here on the pullbacks, we are holding that 38.2, respect on that, respect on this, and even here towards the lows of today's session. So any further holds of this neckline of the 20-ish round number does strike me as bull flag consolidation. We would watch for breakouts up and over the highs to get us closer to these pivots from in here, closer to 25, the nice round number. So let's throw that on the chart as an official level. Then we'll drill down to the intraday 30-minute chart and just see what else is going on here. Yep, so I like that from the daily. We've talked about the flag. Let's clean up the fibs, no longer really serving a purpose there. Zooming in, this is where things get a little bit more interesting, right? You can certainly see on today's session, out of the gates, screaming higher, nice healthy consolidation. However, big sort of plummet after that, right? So weaker consolidation into the actual close, giving us that inverted hammer on the daily time frame chart, which would suggest that there are some sellers, right, hanging around here, and some high volume sellers nonetheless. What we're going to do from this perspective is the same deal. Again, you can see if I were to do the fibs from low to high here, we were holding on to that 50% retracement, even the 38.2. However, what we need to measure this time is from the high, unfortunately, down to the low. And what you'll notice here is that even on this snapback from that candle, notice that the 38.2 did resist this time around. And what that means is that essentially anything that happens sub 2075 is building a 30-minute bear flag here. We would expect a flush of these lows to get us into that neckline from the double bottom on the daily at 1977. And from there, I would really reevaluate the chart. I wouldn't be overly bearish unless we start breaking back down underneath that neckline and it does not hold as an area of support. But as of right now, from the daily, I don't want you to forget that we've already started to establish a higher low here. So any pullback, as long as it supports at this support trend line or higher, is still another higher low on the daily perspective. So let's go ahead and draw that in together as well. There you go for a support trend line. So even if we do something like this, sure, it is violating the 38.2 of this bull flag, but ultimately it would be yet again another set of higher lows. So keep that on your radar from the daily. Again, the 30-minute would suggest that bear flag consolidation can happen underneath 2075. To the upside, it's very clear. Just be patient here and wait for a move up over the daily flag highs closer to about 2150. That's going to wrap up CCL. If you enjoyed the video today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.